Thank you for watching this video. Today we will be doing technical analysis on the stock market for the week ending Friday, July 16th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. The first chart that we're going to look at is of the S&P 500, and this is a 1-month daily candlestick chart. So each candlestick on this chart does represent 1 day of trading. I want to focus on the upper right-hand corner, if you will, of this chart. And right here, Monday, July 12th, the first trading day of this past week, we hit a new all-time daily closing high of 43.8463. Again, that was Monday, July 12th right there. And you can see that from there, the week kind of went downhill. So we'll take a deeper dive into that over the next few charts. But just remember, we hit a new all-time daily closing high at the beginning of the week this last week. The next chart that we're going to look at is a 10-minute, 5-day chart of the S&P 500. So this covers all of this past week. Again, we already know that we had a new daily closing high on the S&P 500 on Monday the 12th. On Wednesday, the 14th, we hit a new intraday high, all-time intraday high on the S&P 500 of 43.9368. So that's right here. And you can see the S&P 500 sold off for the balance of the week, and we closed right at the lows of the week on Friday the 16th. So a new all-time daily closing high on Monday, a new intraday high on Wednesday the 14th, and then it went downhill from there, and we closed right at the lows of the session on the 16th. So kind of a rough last few days in the market this past week. The next chart that we're going to look at is a year-to-date daily candlestick chart of the S&P 500. The green line is the 50-day moving average. The blue line is the 200-day moving average. And for the week, the S&P 500 was down less than 1%, down 0.97%. And we know that that really came during those last 3 days of selling, right? So we were down 0.97%, 97 basis points on the S&P 500, and where the S&P 500 closed was 2% above its 50-day moving average. So if we do pull back to the 50 anytime soon, that would be an additional 2% drop from where we closed on Friday the 16th, and we closed 10% above the 200-day moving average. So if we continue to sell off and pull back to the 200 anytime soon, that would be a drop of 10% based on where we closed on Friday the 16th. So, could there be more downside? Absolutely, guys. And keep in mind, we are going into what is seasonally the worst 3 months of the year for the stock market. It does not mean, by the way, that's August through October. It doesn't mean the market will be negative during those 3 months, or that we'll have some kind of a major sell-off or pull back to the 200-day moving average. But statistically, it does increase the likelihood of that event, okay? So, but just keep in mind, guys, this last week, even though it feels a little uncomfortable, right, because we've had such an incredible run this past year, and we've only had, a few days where we've closed beneath the 50-day moving average all year long. I'm talking about, for calendar year 2021, right? We have not even had 2 days in a row this entire year where the S&P 500 has been below the 50-day moving average, right? The closest we came was right here, where we had 1 day below, 1 day above, and then we barely closed below it the third day there, and that's back in March. But, guys, it's just been an incredible run, right? So even a little pullback like this, where we finish slightly negative for the week, it feels uncomfortable to a lot of people. One area of the U.S. stock market that has been weak for several months now has been the U.S. small caps. So what we're looking at here is a 1-year daily candlestick chart of the IWM. The IWM is an ETF that tracks the Russell 2000 small cap index here in the U.S. And what we can see here is the Russell 2000 has made absolutely no progress since kind of the middle of February right here, right? So here's February, you go to the middle. I mean, we got just a hair higher in March, but we have really just been going sideways since the middle of February in the IWM. So it's really not selling off a lot, right? A lot of, sideways choppy trading action. So this could be nothing more than a sideways base that allows the IWM to break out to the upside. But it's just been a grind, right, for months here. And we're now trading, of course, below the 50-day moving average, and the 50-day moving average is flattened out and even started to turn down a little bit on the Russell 2000. And as time passes here, the ascending, right, the climbing 200-day moving average is climbing up to meet this sideways trading action of the price of the IWM. So, if this trend continues for a few more weeks, we definitely could see the IWM and the 200-day moving average on the IWM converge. So, it doesn't mean that the IWM, the small caps necessarily have to sell off a lot, but if they continue to grind sideways and that 200-day moving average is rising, we could see the price action on the IWM and the 200-day moving average converge, or it even start to trade underneath its 200-day moving average, which of course is not a real bullish sign. You can also see some rising volume here, especially over the last month, but even over the last 4 days of this past week, where we had selling in the IWM. And so just something to watch here, right? You've got rising volume on the selling days, and the IWM was down over 5% this last week. I don't have that shown here on the chart, but you guys can look that up yourself. It was down, I believe, 5.05% just this past week alone. So this is really the area where I'm seeing weakness in the stock market, is in small caps, also some mid caps, but really the small caps over the last few months have been the weakest area of the U.S. stock market. However, the large caps, right, the S&P 500, Dow, triple Qs, those have held up relatively well up to this point. But we will want to watch over the next few weeks to see if this weakness, if this selling persists, or, was this just a few days of selling that is, going to allow the S&P 500 to continue to at least kind of trade sideways, stay above the 50-day moving average, or perhaps even move into new high ground over the next couple of weeks. Only time will tell, guys. But look, if you want to improve your knowledge of how the stock market works, if you want to increase the likelihood that you're going to miss major downturns, right, that you're going to be out of the market, or at least have the ability to reduce your equity exposure during major declines, and at the same time have the knowledge, the confidence to stay with the markets when they're going up, please take a serious look at Simple Market Signals, guys. I've got paying clients, right? People that are paying me as subscribers to my service. And these guys over the last couple weeks, several of them, these are grown men in their 40s, 50s, 60s that are calling me to say thank you, right? And one of my subscribers recently told me that he has made tens of thousands of dollars this year in his 401k that he otherwise wouldn't have made if he wasn't my client, if he wasn't a subscriber to Simple Market Signals. So, guys, that is some serious ROI, right? So please pay close attention to the balance of this video. Make up your own mind. But if you run any of your own money, including in your 401k, maybe your 403b, your IRAs, your trading accounts, whether you have a financial advisor or not, or if you are a financial advisor. I have hedge fund managers, guys that run RIAs, money managers, financial advisors, mutual fund wholesalers, a ton of people in the financial services industry that subscribe to this service. But whether you're a financial professional or an individual investor, guys, please spend the next few minutes watching the balance of this video, because it really could make a big difference for you on a go-forward basis. Thank you so much. Please pay close attention to the balance of this video, and I will see you in the next video. Let me ask you a question. Do you have a stock market risk management and trend direction system in place? Do you know the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the trend of the stock market? My system is Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecast, or guesswork in simple market signals. It took me over 20 years to develop simple market signals. I developed simple market signals by reverse engineering the stock market, and I studied the stock market over numerous time frames, including numerous bull and bear markets. And what I found is that certain conditions exist during various market phases, and then I created simple, easy to understand signals around these different phases of the markets. And the thing is, guys, that most people don't know about or have access to the data necessary to do the research that I had to do to create this model. Simple Market Signals is a proprietary stock market risk management and trend direction model. And Simple Market Signals is perfect for financial professionals and individual investors. There's two major components to the proprietary model. There's a risk level signal and there's the general trend indicator. Let's start off with the risk signals. The risk signals are simply green, yellow, and red. The green signal has the lowest equity risk associated with it. And what you're going to find is that most all upward progress in the stock market will be made in a green signal environment. Said another way, it is hard to make money in equities unless the signal is green. The yellow signal means there's moderate equity risk, and sideways to slightly up or down price action is very common during a yellow signal environment. The red signal has the highest equity risk, and the worst sell-offs, including bear markets, will happen when the signal is red. A quick review of the risk signals. The green signal is the best risk-reward ratio signal for equity investors, and what you're going to find is that most upward progress in the stock market will happen in a green signal environment, as we see here. The red signal is the worst risk-reward ratio signal for equity investors. And what you're going to find is that the worst downturns, including the downturn in Q4 of 18 and the bear market in Q1 of 2020, plus the bear market from 2000 through 03 and the bear market of 07 through 09, all of those are going to take place in a red signal environment. Now let's put it all together and see how simple market signals could have helped you during the fastest bear market in history, which of course happened during Q1 of 2020. We had a strong stock market coming into 2020, so the risk signal was green coming into 2020 and remained green for the majority of January. We did have a yellow signal for about 2 weeks towards the latter part of January, first part of February. And then, of course, the risk signal went back to green. And then on February 19th, we hit what was at that time the all-time high on the S&P 500. Again, that's February 19th. And then things started to unravel from there. But think about this. Just a few days after the all-time high at that time in the S&P 500, on Monday, February 24th, the risk signal went yellow. And then on Tuesday, the 25th of February, the general trend indicator went negative. And that general trend indicator had been positive since October of 19, okay? So right there, just a few days after the all-time high in the S&P 500, the risk signals started to tell you that something was changing, that there was increasing risk in the stock market. And by Thursday, February 27th, the risk signal was red. And then, of course, the market sold off hard from there. So think about this, guys. I mean, you talk about stress testing my model. During the fastest bear market in history, that started just a few days after the all-time high at that time, the all-time high in the S&P 500, in 1 week, the risk signal went yellow, the trend indicator went negative, and then the risk signal went red, all in the same calendar week, actually within 4 days, right? Monday, Tuesday, and Thursday. So you talk about stress testing my model. Guys, I mean, this is the fastest bear market in history, and look at how simple market signals could have helped you during that time. With simple market signals, you will know what the risk level is and what the trend direction is in the overall U.S. stock market. And the proprietary model is based on S&P 500 data. The S&P 500 index really is the best proxy for the overall U.S. stock market, and it's the only index that has all of the data available that I need to run the model. And guys, it's not about beating the S&P 500. However, that is a possible outcome over time if the tools within the model are employed properly. It's about risk management and risk control. It's about controlling your risk exposure rather than letting the whims of the market dictate your future. The best fit for simple market signals is an investor or a financial professional with at least a 6 to 8 week plus time frame that they're focusing on. If you're a shorter term trader or a day trader, simple market signals may help you a little bit, but the reality is that the best fit between simple market signals and a subscriber is somebody that has at least a 6 to 8 week time frame or more that they're focusing on. These signals are delivered to subscribers in our weekly emailed newsletter. As part of the Simple Market Signals weekly newsletter, you will receive the proprietary risk level signal and charts on the overall U.S. stock market. You will also receive the general trend indicator signal and charts on the overall U.S. stock market. You will also receive a weekly recap of what happened in the U.S. stock market, including performance information and charts. And this is on multiple investments. So we cover small caps, mid caps, large caps. So you'll have a great idea of what's going on in the entire U.S. stock market across all capitalization. You will also receive technical analysis data and charts, so things that are interesting and educational that I think is important for you guys to know will be included in the newsletter on a weekly basis. You will also receive fundamental analysis data points on the S&P 500, so we look at potential earnings per share for the year, as well as the possible PE ratios and then price levels looking out to the end of this year, and then I generally go out to the end of the next year as well. So you'll have great fundamental analysis data to work with on the S&P 500 right at your fingertips every single week. You will also receive yield curve information and data points. So we look at the 2s and the 10s. So the 2-year Treasury note, the 10-year Treasury note, and then the spread, the differential between the 2s and the 10s. This information, guys, very few people know about it. Very few people watch this. This is so important to really get your head wrapped around because it affects so many areas of the financial markets. And you will also receive the proprietary risk level signals on all 11 major sectors of the S&P 500. So not only do you get the risk level signal on the overall market, but we also give you the risk level signal on all 11 major sectors of the S&P 500. So you can see what the risk level is underneath the hood on all of the individual sectors. And you will also receive sector performance information on all 11 major sectors of the S&P 500 over multiple time frames. So guys, you're going to get all of this, right? And it's going to make you so much more knowledgeable about the financial markets. You're going to be able to have a conversation with virtually anybody about the stock market, and you're going to be able to really understand things at a level that very few people do. And guys, you're going to get all of this for just $19.95 per month. That's less than 67 cents per day. I want to set realistic expectations. The weekly emailed newsletter isn't fancy. It's effective. It's plain text, no color, other than the charts, of course, and no fluff. But it's chock full of extremely valuable information week after week. And please note, due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, this is just due to international compliance regulations. A subscription to Simple Market Signals is just $19.95 per month. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. Sign up is quick and easy. Just go to simplemarketsignals.com. That's https://simplemarketsignals.com. It'll take you about 4 or 5 minutes to subscribe. It's that easy. Once you reach the website, the first thing you will need to do is accept the cookies. Please notice that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to use this website or our services. And that is just due to international compliance regulations. All right, so to get started, all you have to do is click this green button, and that will take you to the product page. And this explains, of course, what you get with your subscription. And then just make sure that that says 1, because if there's more than 1 in there, if you have a 2 or a 3, you'll get multiple subscriptions to the service and you only need 1. Click the Sign Up Now button, and that will take you to the checkout page. Once you're on the checkout page, fill in the necessary information, anything that is required, including the email address. Keep in mind that this is an email newsletter, so we will have to have your best email address on file, and make sure this box is checked, because that's how your email address gets into the system. So if that is unchecked, your email won't get transferred into the Simple Market Signals system, and you won't get your newsletters. So please make sure that box is checked. And then, of course, just double check, make sure that your monthly total is going to be $19.95 a month. Remember that your first 2 weeks are free, so your first renewal date will be 2 weeks after your subscription date. Fill in your credit card information. You will need to accept the privacy policy and check that box that says you've read and agreed to the terms and conditions. Click the Sign Up Now button, and it's that easy, guys. It's probably going to take you maybe 4 or 5 minutes total to fill in everything and subscribe to Simple Market Signals. A few points to remember with respect to your subscription to Simple Market Signals. Remember that everything is tied to your email on file. Now, once you subscribe, you will get an immediate emailed confirmation of your subscription. You will also receive an automatic welcome letter, so that's automatically generated from our system. And whether you see that welcome letter or not, I would encourage you to double check your spam, junk, trash, and promotion folders, especially for the first several weeks of subscription, because once in a while, our emails get automatically routed into one of those different folders depending on your email service provider, whether it's Gmail, Yahoo, whatever it may be. And I would encourage you to get in the habit of every week or two, just go out real quick and double check these different folders, the spam, junk, trash, and promotion folders, because I can't even tell you how many times I've had people say, well, I didn't get the email, and then when I tell them to go out and check those various folders, oh, there it is. So it's just, the reality of having an emailed service that once in a while, and it's going to vary from email service provider to email service provider, but once in a while, the emails from us, depending on the subject line and other things, will get automatically routed into one of those different folders. Also, I would encourage you to whitelist all emails from Simple Market Signals. In other words, just make sure that your email service knows that you want all Simple Market Signals emails to go to your primary in basket. Also remember that newsletters go out on the weekend, okay? They generally go out Saturday afternoons, but they could go out anytime over the weekend depending on our production schedule. And the next new edition will be sent to you on the weekend following your subscription. So if you subscribe on a Monday, Tuesday, Wednesday, whatever it is, the next new edition is going to come out on that weekend following your subscription. But we will also send you the latest edition, so whatever the most recent edition of our newsletter was, we'll send you that latest edition as soon as we can, but we have to manually send that to you. Generally, you will receive that within 24 to 48 hours of your subscription. So again, if you don't see that first newsletter within 24 to 48 hours, go back and double check your spam, junk, trash, and promotion folders to make sure that it's not hidden in there. Also, within that first 24 to 48 hours, we're going to send you at least 1 or 2 emails with links to training videos that are for subscribers only. So please make sure that you're looking at all of this, because it's extremely important for you to get the most out of your subscription. Please watch those videos that are part of the training material that we send you. Now let's recap what you will get with your Simple Market Signals subscription. With your subscription, you will receive the weekly email newsletter, which goes out on the weekends, that will include all of the content that we just talked about. Plus, you will receive midweek update emails when warranted. So if there's a major signal or trend direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to send a midweek update email to get you that information as soon as possible. So again, a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents a day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. To get started, just go to https://simplemarketsignals.com.